Welcome to Smart Investing with Philippe. This is time for market update. Let's go through the usual QQQ, SPY, IWM, and some of the key stocks popular in the market. We go through the economic data. If there are any economic data, we go through the headlines, and then we wrap up for the day. Before going to the market update, please subscribe to the channel, like, and leave a comment. Thanks so much for helping me to grow this channel. I see that I have already 6 or 7 subscribers. Thank you so much for subscribing. I appreciate every single one of you. This is the beginning of a new adventure, and I'm grateful for every single subscriber I'm gaining. Thanks so much again, and let's get into the market update. So let's start with QQQ. QQQ, massive gap up move. You can see clearly here. I told you for the last 2 weeks, we have seen a bottoming process, and I told you that we will see clearly. Let's move to the daily here. Because it is a 2-hour chart. I prefer to play on the daily because I'm not like a trader. So this is the daily chart. You see clearly today a gap up, which is a clear sign that we have actually finished the bottoming process and now we start the recovering process. What we can see also, and that is quite encouraging, is that the candle is actually all green, and we finish the day, we close the session at the highest of the candle. So that's a clear sign that the whole session has been extremely bullish. We can see also that the RSI has been increasing significantly now. It's at the neutral level at 50, which means we are neither oversold or neither overbought. And then we should continue now to the upside unless there is something significant happening in the market that will also bring back the the market down again. But otherwise, we will go and see to the upside from here. SPY should be the same story. Yeah, clearly a huge gap up. We can see the resistance of the 200 moving average. Huge gap up and a clear full full green candle, which is a clear sign of bullishness during the whole day. The RSI as well is closing at the 50, so which is a neutral position, neither oversold, neither overbought, and that's a clear sign that we have finally started to recover from this downside. So that means we are probably not going to see new lows until the next crash. What is also a clear sign that we are bottoming and that the bottoming process is actually well over and now we are starting to recover is the VIX. I told you, usually the VIX, when you have the peak of the VIX, is actually the bottom of the downside market. And you can see that clearly the VIX has been collapsing from the peak by almost 40%. And when you see a VIX collapsing like this so fast, and now it's reaching its 200 moving average, and then you see at the same time that the market has bottomed and trade sideways, but now it's clearly gapping up. This is a clear sign that it's over. We're gonna recover. I'm not saying we're gonna reach all-time high. What I'm saying is that we are going to start to recover, and then unless there is another catalyst that will bring the market down again, we are going to all-time high over time. So clearly March will be the bottom. The bottom will be the next 2 weeks, the last 2 weeks, where I told you we are seeing clearly a bottoming process. And I want you to go back to all the video I've said. I actually stick to my guns, and I told you why exactly we are seeing a bottoming process. So please, just trust me. I have a lot of experience in the market, decades of experience. I've seen a lot of crises. I've seen a lot of crashes. And this is showing me the bottom is here and we're going to recover from that bottom. And we are seeing clearly a rebound from that bottom. So unless there is another catalyst, another strong catalyst to bring the market down again severely, I don't think we're going to go down again. So now let's go to MAC 7. Huge rebound on the MAC 7. I told you for the last 2 weeks that they will defend the 0.61 Fibonacci retracement, which is a very critical point on the Fibonacci retracement level, and you can see the market defended that level for almost 2 weeks, and now it's clearly gapping up to the 200 moving average. So 200 moving average is a very big test. If we in the next coming days we clearly close above the 200 moving average, the next target will be 55, where we actually have been hovering since quite a while, since December last year. So let's see how this is going to play in the next coming days. Otherwise, you can see clearly AMD huge gap up. I told you that it will never go down lower than the 0.78 because otherwise it's a full retracement from the 2023 level, and that's almost impossible for a company with such huge quality and such huge potential. So if you have missed the bottom at 95, I think it's too late. You're not gonna see a 95 anytime soon, unless there is a huge catalyst from the downside. But this is it. You can see now the bottom of AMD. The same for Palantir. Palantir has recovered already massively from the bottom. Bottom was 75, and you can see from 75 in just few days. Now it's already 30% up. Clearly, Palantir is a speculative name. If you see Palantir recovering that fast, that means the market is not at all at the correction phase, at the rally, and the long-term trend on the stock market rally on technology is not over. It's still intact. People are still believing in a lot of technological company and the AI change and AI revolution. SMCI, nothing special, just still moving. Story still stable, no, not moving up, no down. IWM, clearly, I told you that it will defend the 200 level. It rebounded quite sharply from that level, and now it's starting its process to the upside. So I think the next critical point and next critical level we're going to see for IWM is if it goes back to the uptrend channel between the two yellow line, the channel that we've seen from 2014. You see it started here, and it just break down this channel on this downside, and now we are going to start to recover and go back to that channel. Bitcoin clearly closing over the 200 moving average. That's a clear sign it's a bullish trend. Or actually significantly the 200 moving average and now closing higher than 200 moving average. Then the next step will be back to the usual trading range on the top, and maybe all-time high and breaking out the all-time high. Euro dollar, I told you it will trade around this level because that's the natural level since actually 2022. So I don't think we're gonna see the dollar the euro dollar going much higher than what we are seeing right now, 0.70, trading between 1.10 and 1.05. Usual trading range for the dollar euro. So what else can we say? The MAC 7, you can see all of them has been positive today, whether it's Apple. Next target 200 moving average, Amazon. Right closing above the 200 moving average, Amazon is a very good opportunity to buy right now. A lot of good fundamentals for Amazon. The same for Google. Google, next target 200 moving average is massively oversold. You can see was 206, now 167. Was 160, so it retested the low of 160 that we saw last year. Meta didn't manage to break below the 200 moving average. That's really a sign that Meta is extremely strong. Very, very strong fundamental company, very, very strong company. And technically, it never really crashed because although it corrected quite a bit, I mean, it corrected close to 22%, which is quite a lot, but it's actually diverged massively from its 200 moving average, but now it rebounded smack onto the 200 moving average and clearly closed well above the 200 moving average. That means, Meta from the low of 2023 has a clear channel on the upside, and it's keeping its channel, trading above the 200 moving average since 2023. Very, very, very strong company, and the one who have missed to buy Meta at 574 will regret it because that was a very good price. I told you I've doubled my MAC 7 position at the bottom of the downside. You see, a lot of people say you cannot time the market, you cannot clearly catch the bottom, but sometimes if you are experienced, you can. It doesn't mean you are always managed to do this, but I can recognize the pattern where the market is bottoming or not. Microsoft, well below the 200 moving average, so let's see what will happen. Netflix, magnificent, trading above the 200 moving average, and I think it will go to all-time high and continue its rally. Netflix is a fantastic company. It's a booming giant, and I don't think that it will stop going up and up and up. NVDA, 120, next resistance level is its 200 moving average at 127. So let's see what will happen in the coming days, but clearly NVDA bottom at around 103. So you see it's almost smack the 100 level, but it's very difficult for a company like NVDA to break down the 100. You know, a lot of people, I heard a lot of stupid people saying, yeah, it will go below the 100 level will go to 90 or 80. I just say to these people, you cannot read a balance sheet, you cannot read the fundamental of a company, you don't understand about valuation. NVDA is a very, very strong company, a lot of growth potential in the coming years. And the valuation has come down dramatically from what it was trading 153. I'm not saying that it's not going to, it's going to go to all-time high and just break out and just go to 200 in the next coming months. I don't think so, but you never know with NVDA. Of course, the rally we've saw in the last 2 years will not happen again, that's for sure. But you can still double your money in the next 3 to 5 years. With the AI trend and with what we've learned, the last presentation of Jensen, then we know that this is the future. It's not going to stop, you know. Tesla, massive upside today, almost 12%. Clearly, almost smack to the long-term trend channel like we see in yellow. You see the yellow line? It's the long-term upside trend channel that almost smacked into it and just rebounded. Rebounded slightly over the point of control, where you have the highest volume of trading. So you see Tesla is a massive upside today, 12%. So Mac 7 altogether is 3.3%. Other than that, we are going next to... Okay, the economic data today, we can see nothing very important, although that we have the S&P Global Composite PMI, which has 53.5. Clearly no recession. No recession. With a PMI 53.5, higher than the prior PMI of 51.6. I don't think you're going to see a recession. Of course, the manufacturing is slightly below the 50, but nothing so dramatic. And global services 54. And last forecast was 50.8. And last, the previous data on the PMI services was 51. Clearly, we have no sign of recession at all on the services and global composite PMI index. So I don't think that we're going to see a recession anytime soon. And that's very positive for the market. Tomorrow, what can we expect? What data can we expect? Nothing very interesting tomorrow. On Wednesday, the same. So Thursday, the usual core PCE, GDP growth rate, continuous jobless claims. So the next important date for economic data is Thursday. So let's check on Thursday what will happen. So next we are going to check on the headline. What has been the headline? Headline, clearly very positive, of course. The market is extremely positive. So headline will be positive. Stock power, risk on rally on term tariff signal. So again, is all this game with Donald Trump and the tariff. One day it's blowing hot, one day it's blowing cold, and that's a game that he's playing to get the other party to negotiate on the tariff. So it's not going to last long, you know, this tariff problem, you know. I don't think so. So another headline, Wall Street sees sign that worst of US stock sell-off is over. You see, if you see the headline like this, that's mean the sell-off over, you know, the narrative has shifted. Narrative has changed very fast. You see last week, all doom and gloom. Today, we see sign that the worst of sell-off is over. Now, Trump is blowing hot again. And we're going to resolve the tariff issue, you know. Back at the stagflation playbook for stock as Fed flags risk. What else? What else? Volatility is on Haven currency as tariff view moderates. So you see, nothing really dramatic. Wall Street sees sign that worst of US stock sell-off is over. It's not only Wall Street that sees signs. I also see signs, you know. I used to work on Wall Street, but I can see signs also The worst of the US tech sell-off is over, you know. It's not difficult to see if you're a bit experienced in the market. Anyway, that's it for today. Thanks for watching. Please subscribe, like, and leave a comment. Bye.